Welcome. I'm gonna wait a couple minutes, maybe 1 or 2 minutes more, so some folks can join us. So I think today's structure is mostly, I think I will speak for first 20-25 minutes. I'll go through your questions. I will first go through some of the things I have prepared, and then I will, like maybe I should wait 1 more minute before I tell this. Just okay. Welcome everyone. Wow, a lot of you showed up. That's good. Everyone wants to learn. That's great. That's good to know. Okay, so welcome everyone again. So today, first, I think 10 minutes, maybe 5-10 minutes, I will go through um, some of the thoughts I have on risk management, basic risk management, not advanced. And then questions you guys have, and then I'll open the floor for maybe 5-10 minutes for you guys to ask questions here live. This is my first space, so please bear with me if there are any technical issues, um, and also like managing the space as well. So yeah, so first things first, um, with respect to risk management and options, you need to know that there are many strategies. So my strategy is basically naked call buying or put buying, which is in itself is the riskiest one. I mean, if you're looking for something which like you don't want to look at the charts whole day and you want really low risk, defined risk setups, then you can go with different strategies, like straddles, spreads, and stuff like that. Not gonna cover those in this specifically. So this applies to naked call buying, naked pull buying, put buying, out of money calls mostly, out of money puts mostly. Now, like first thing you need to understand with risk is you need to come up with a system for yourself says that it's repeatable, like you can repeat that on different setups, and also there are different strategies for different um, scenarios. For example, swing plays have different stops, um, scalps have different strategies. I'll go over that later. So your goal should be to first and foremost come up with a strategy of your own or follow mine such that you can repeat that over time. This is very important. You cannot change this um, every day or every other week because you will not really see how to tweak that strategy or how to tweak your process if you're changing it every day. Trading is a process, it's a science, so you need to change one variable at a time. And risk management is in itself a very broad topic. So let's see how many of you are here. Um, 72. That's good. Okay. So I know some folks have different account sizes, so let's go over that. That's the most crucial thing with risk management. Let's say that you have $1,000 account. You're just starting out. So in this case, your risk is very low. Like option contracts on average, like 500, like the liquid stocks and highly traded stocks, their out of money contracts are somewhere around $400 to $300 and more, some of the popular names. So trading those, you're putting half of your capital if you just buy one out of money call. That's not a good strategy. Like, in my opinion, since your account is like $1,000 account, let's say, you should only put maximum 10% in one trade. So that limits your ability to just like play very, very liquid stocks which have small spread. By spread, I mean the difference between the bid and ask on the options level two. So let's, for example, one of the best ways is to trade like Apple, SPY, and just look at the price action and trade them. I don't think swinging something would be a good idea unless uh, you know the um, the setup is amazing and it's within your risk tolerance. So let's say that you have 10%, you're putting 10% of $1,000, that's $100 in one trade. So your risk is literally $10 or $20 because you cannot afford to lose more than 2 to 5% of your account, um, because you will, like, it gets harder and harder to get back that money. So for accounts less than $1,000, keep it simple. 10% of your account size and 1% is your risk of that 10%. So $1,000 account, $100 trade, $10 risk. And the way you can do this is to buy SPY and QQQ contracts, out of money contracts, right at the support or resistance levels. Just go through their charts, look at absolute support and resistance levels, and then buy there or on the EMAs. That way you have minimal risk, and you have to take profits fast. So it's 1 to 1. So you make $10, you get out. You do this for 10 days. Now you have $200. You have $100 more. And then now you can increase your risk tolerance, and then you can increase your position size. Let's talk about someone who has $10,000 account. You know, so in this case, you have fairly, like wide. You have options in this case. Um, let's say that you put 5% of your account size, that's just $200, um, in one trade. That I would not recommend to go $1,000. That's 10% of your account size. That's way too much. So 5% to 7, 8%. If you have high conviction, you can go in. But try to keep it to 5% of your account size if your account is like around $10,000, and then your risk in this case would be 4% of the trade itself. So in this case, around $50. So this is a way that this goes hand in hand with position sizing. You can only afford to buy one contract if you're willing to lose $50 on a $200 contract. So a lot of times I've seen people just buying, like, just go all in 5 contracts. And why, like, in that case, let's say that your risk is $50, you buy 5 contracts. So that means that even if your contract moves down by 10 cents, you'll be out. You will not give your play to at least play out, like your setup to play out in your favor. So your position size goes hand in hand with your risk. Very, very important to keep that in mind. So in this case, let's say that your risk was $1,000, right? In a $10,000 account, your risk was $1,000, and you're buying $200 contract, out of money contract. So let's say you're buying 10 contracts. Sorry, you're buying 20 contracts, right? So that's the position size you should have, 15 to 20. That's like per contract, you're willing to lose $50. So you're buying 20 contracts, and then you can adjust your profit taking based on that. So this is very important. Keep every time, just don't blindly go and buy 10 contracts just because you think it's going to work in your favor. I know that urge uh, to just like FOMO in, and then later to realize that you've already, hit your stop loss. And then a lot of people complain that, oh, it went without me. Well, of course it went without you because you had very tight stop, you way too much position sizing, and then now you're regretting that. So don't do it. Uh, do this today. Do this calculation. Whatever your account size is, based on that percentage I told you, do that calculation. So tomorrow or Monday, you know that how much you are willing to risk and how what's your position size per contract. And as you get more experienced, as you trade more, you can do it faster and faster. You don't have to manually calculate it, but when you're starting out, you need to do it like that. Okay, so one final case would be, let's say you have 100,000 in your account. Then in that case, your risk tolerance is even higher, because you like 1% of your account would be, excuse me, 1% of your account would be like $10,000, right? Sorry, 100,000. Yeah, 1% would be $10,000. So in that case, you can put $10,000 in one trade, and your risk is, let's say, 5% of $10,000, right? So again, same principle apply. So your account size, your contracts, how many contracts you will get, everything depends on your risk. So know your true risk before getting into any trade. So this is options risk management 101. Um, Again, three factors to keep in mind: your account size, your position size, and your risk tolerance to determine before a trade. Like, you need to have a trade plan, and this is part of a trade plan. Now, another thing I want to talk about is risk is higher for weekly options and out of money contracts. I think a lot of people confuse this thing. Like, a lot of people have asked me on Twitter before. So your risk is very high for weekly contracts with out of money, out of money contracts. And the reason is very, very simple. The probability of you getting in the money for those contracts very low. So your risk is high, but your reward is also very high. Like the other day, one guy put $3,000 in EXC, 2 days to expiry, and 50 out of money, $50 call out of money, and the stock was at 48.5 or something when I alerted. So, I mean, that's way too risky for someone whose account size is $10,000, because you can lose that. Like, the bid and ask spread was $5 and zero. So, yeah, sorry, 1% of 100K is 1,000. I know I messed up, but uh, let's move on. You get the concept, right? Uh, uh, what was I saying? I lost my thought. Yeah, so I was telling that your risk is higher for weekly in the out of money contracts. So play them very, very carefully. Like, my suggestion would be to don't go more than like one, like one level out of money, like at the money. So like, for example, let's say that it's Tesla, and Tesla is at 800 right now, and you're hoping Tesla to get to 810, right? And there's only 2 weeks left for expiry. Sorry, there's only 2 days left for expiry. So you buy 810 call. You don't go and buy 820, 830 just because you don't have enough capital to do it. And the reason is simple, right? Like, the chances of it getting to 820 is low. I mean, your profit is high. Of course, your reward will be more. But unless you have very, very high conviction, there's a catalyst, the news is good, the price action looks solid, doesn't make sense. I mean, all these tips apply to like beginners and intermediate traders, I would say. Like, if you have been trading for, let's say, 8 months, 9 months, 10 months, and you have seen consistency in last 3 4 months, then you can uh, go further out of money contracts, because you have a sense of whether it will go or not depending on the price action that day. So as a beginner, that's why I say that don't blindly follow what I'm alerting. Go to optionstart.com, figure out that what's your true risk, and then based on that, figure out your position size, and then enter what contract size and everything else. Don't just blindly follow, because what will happen is that if it doesn't work out in your favor, you'll lose big. So, for example, one bad trade the other day was Netflix. I alerted that without waiting for confirmation that of the level break with strong volume, and we got trapped. And luckily, like it worked out later in the favor when we averaged down and bought the dip, sell the rip. But in the hindsight, a good trade would be to wait for the level to break, which it didn't. It didn't break 636. It should have, and we should have waited for that. So yeah, that's another thing I wanted to talk about. That our money risk is highest on the weeklies. And then next thing I want to talk about is let's say that you want to you have no way to look at the charts daily. Like some of us are lucky that we are working from home and we have the everything in front of our system to trade, but some folks don't have that, like someone who is a nurse or something like that. So in that case, what I would suggest is to first use like a broker which supports advanced orders like OCO orders. One cancels the other, and like so you can automate as much as possible based on the levels I talk about, and then you can set automatic stops and everything else, so you don't have to look at the screen whole day. And that's the way you can manage risk if you're not looking at the charts every day. And I'm going to talk about what different techniques for risk management with respect to swings and scalps, but just know that, like use the technology uh, for your benefit. It doesn't take too much time to uh, go and look for a video for this and then set up your Thinkorswim for that, or any other broker which supports advanced orders. So another thing I want to talk about is, so I think this was also a question a couple of folks asked this. So I'm gonna definitely go over this one because this is something I wanted to talk about. Was um, swings versus scalps, how to manage risk. Now, with respect to intraday scalps, I don't think it's a good idea to take them if you're not watching the charts. Or because let's say that you're following my tweets, you look at my tweet 5 minutes later, the stock has already moved 5 points, and now we are taking profits while you're entering the trade. Not a good scenario for scalping or intraday swings. So for intraday swings, if you cannot look at the chart, I would say avoid them. But if you can look at the chart, you can actively manage the trade, then it's great. You can follow me along. And risk management is not just on numbers, it's part of trade management as well. So if you cannot manage looking at your trades, at least set a stop. Like, don't let the contracts go to zero for just because I alerted that. So for scalping, one of the best ways for me has been, and I've done it consistently for a while. So it's just from experience, I can tell you that I use 5 minutes Ripster EMA Cloud default. So that means it's the leading EMA, so 512 EMA. And then on my other Webull platform, I have the same chart when I'm scalping, and it's 921 EMA. So I have both these different, like sources, and that way, so think about the psychology of this. If a stock, let's say for example, Zoom the other day or CrowdStrike, if the stock hasn't, like, it started early morning 9:30, there was a huge green candle, and then it has never broken down until, like, let's say 10:30. The pullbacks have been very weak, and it has not broken down the 512 EMA. What does that tell you? There is some buyer sitting there buying the dip, right? So as long as that EMA is holding, you can continue, taking the, like, profits, rolling over whatever you think. Or if you have met your profit target, get out. You know, my intraday swings are advanced, I would say. Initially when I started as a beginner, my goal with scalping was to take profits on the initial run. As soon as it started consolidating, or I saw a big seller on the tape, or I saw a series of sell orders on the tape, I'll get out. I don't care if it goes to the moon. Only reason is because I wanted to instill confidence in my plays and scalps, like that I can do it. It was more about getting in and out quickly so I can move on and trade other setups. And that works great. It's less mental hassle because you can get in and out of a scalp in less than 5-10 minutes, and you can put like position based on your risk tolerance and make like a decent amount of money, right? You won't get 100%, 200% for scalps. That's rare, unless it's like Upstart or Moderna or something like that for high ATR stocks. But in general, like your profit target for scalps should be like, you cannot have like some out of the world profit targets. They should be normal profit targets. 20%, 30%, 50% is good. And then stops that I told you already, EMA. And then second one is look at where the stock was consolidating for a while, and just below it put the stop, just a little bit, couple cents below it. And for new beginners, like people who are just starting out, as soon as you buy contracts, set your stop loss to 10 to 20 cents below the bid price of the tape in the options chain. And that way, the only, like, even though let's say that you're willing to lose $50 for one trade, you won't lose $50. You can put $20 below. Like, this is just for beginners. When you're buying at absolute support, if you buy at resistance and you're keeping 20 cents below the bid stop, most definitely you're gonna get stopped out. So this is only applicable when you're buying at absolute support levels. Then you can keep your stop very, very tight, and that's the best way for you to not lose capital. And once the move is in your favor, move the stop up to your like the ask price, whatever your filling price was. Just go to break even. I don't understand what's the reason behind keeping, like, not having a break even. You're not taking profits because you want to trail uh, the price action, but at least keep the stop up so you don't get like a kill candle and then you're holding hoping it will come back up. It won't come back up. I mean, chances are that it won't come back up. So uh, just don't do it. Just keep your stop. As soon as the move is in your favor, move your stop up, so at least you're not losing on a winning trade. There is 100% uh, chance, like probability in this case. If you move the stop up, you're not going to lose money, and that should be your goal. First of all, that not to lose money on a winning trade. And if you're too worried about not keeping a stop, just take the profits and move on. Tomorrow there will be another play. Uh, so those are my thoughts on, like, scalps and intraday. So for swing plays, it's a completely different ball game because you're buying 2 to 3 weeks out, so you can keep wider stop because your contracts won't go, like minus 50% in a day or 60% in a day. I mean, if it's a high IV and like the IV gets crushed, that's a different thing. But for normal IV, like something which is 60 to 80 IV, um, you know, you can keep, you buy 2 to 3 weeks out for a swing play, you buy out of money calls. And for me, I keep it simple. I keep it around 30 to 33% uh, loss. And I try to buy at absolute support or break off a critical resistance. I don't want to get inside the chopped up. zone and pay for time decay. So I wait for absolute support like EMAs on a higher time frame. So for swing plays, you have to look support on higher time frames. So for me, it's daily and also 4 hour. I don't go below that for swing plays because I'm looking at multi-week setups, right? 2, 3 weeks out. So I want to buy at absolute support, so that way I can, even if I put 30% stop, let's say even if I put 20% stop, chances of me getting stopped out would be low. So that's one thing to keep in mind. If you go watch my video for CrowdStrike, you will see what I'm talking about. It was right on trend line. Stop would be very, very close, like if I was swinging it. And I did swing it, 3 contracts. So yeah, for swing plays, completely different ball game. You have wider stop for swing plays, and sometimes what happens is that, let's say that one question was that, oh, it went 50% uh, down, and the next day it ran 200%. Well, that's what swing plays like do. So if you're too worried about that, the mistake probably you made was not buying at support. Or second, maybe you bought early morning when the IV was high for the swing plays. So for swing plays, look for pullbacks on intradays or daily. Like that's the best way to get in for swing plays. Look for pullbacks, get in that time. If it goes above, let's say that if you were planning to buy uh, for Netflix 640 call 3 weeks out. Well, if it goes above 640, you can get in later, right? Like you don't have to get in earlier. So wait for pullbacks or get in later. That would be the best scenario for swing plays. And for swing plays, another thing to keep in mind is again your position size. I told you the same rule applies, and you need to take profits with swing plays. Like you need to have, let's say that you have 3 contracts or 5 contracts. What I do is I take 5 contracts initially, and let's say I am doing 50% of my position size on day one of when I identified a swing play, and then remaining 50% I can average down. So this was another question: when to average down? Well, if your position size is 100%, you're not supposed to average down, even if your conviction is high. Because if your conviction was high and the stock is not going in your favor, what does that tell you? That maybe it needs more time, or maybe what you thought is not right. So, as long as your position size is 100%, I won't recommend you to average down if you're just starting out. And then let's say that like your position size is 100% on a swing play, and you got it at a really great entry point. You buy 5 contracts, let's say. So what I would usually do is that, let's say if I get a really good pump the next day, right? The stock moved in my favor. I'm already in the money. I will sell Most probably I will sell 4 contracts, like 50%, more than 50% of my position. And then I will wait for maybe pullback, or next day I will add more position. Um, so this is called like swinging around your core position. So let's say you have 5 contracts and you move, your stock moves, your option contracts move like maybe 50% in next day. Just take profits, like sell 3 contracts, and then remaining either you can put like let it ride for some time, move your stop up to your initial price or even higher, or whatever resistance the stock broke, keep at that level. Those are the ways you can, trade around your swing positions and also not lose money. Like this was a big mistake I made initially when I started. Like everyone told like let runners run, so I thought, well, why not let it run for a couple days, only to realize that the stock just like dumped on me the next day, and I was in huge loss instead of taking the profits. So just like take profits when you get chance. Don't wait for home runs. Um, unless you are like constantly monitoring it, or there is some really positive catalyst Like, I don't think it's a good idea to wait for home runs on a small account. So those are the question. Those are some things to keep in mind for swing plays. So I think that's all I will cover with respect to what I had to say. I'm gonna quickly go over some of the questions you guys asked. Some of you asked really good questions, so you know, it's good to know that you guys are thinking about these things, not just YOLOing your money inside one play. So one question is by Ahead Vigo is how to properly take profits, setting stop loss, avoid green turning red, right? So I already told you, right, that once the move is in your favor, just move the stop up so that you don't, at least you're not losing the money you put in. And if you have more than, let's say, that 2 or 3 contracts, take profits on half of the size and move the stop up. Like, doesn't matter if it's a swing play or scalp, this applies everywhere. Your goal is to not lose. Get that in your mind. Your goal is to not lose money on a trade. Your goal is to not, like, it's not like to make 100% or 200%. When you're starting out, when you're getting to advanced level, then your goals might change. So for beginners, your goal should be to keep cash, like, maintain a healthy level of cash every day. And the only way to do is to move your stops up. And I try to, like, tell you guys on intraday scalps as well to do it, but some folks are still not doing it. I don't understand why. It's just, if you get stopped out, what's the big deal, right? Tomorrow you can create another setup. It's not like this is the only play which will be available for you. Yeah. So another question. So there are some questions which are not really related to stops and stuff, so I'm gonna skip them. I'm sorry, but just try to keep it to risk management. Uh, how to know when it's time to bail out completely by turtle? Any indicators or red flags that you time to cut and tell you time to cut entirely? Yeah. Okay. So red flags would be, let's say you're doing intraday scalp, right? And you see a kill candle, like a bearish candle on a strong volume, get out. Don't wait. Don't wait for pullbacks. Get out. Like, even though it might come back up, like, what's the big deal? Just take the loss and move on. Because if you don't do it, and in case like the dump continues, then you're stuck. That's not a good feeling. Just get out. Um, so yeah, and for swing plays, I already told you, you need to have a stop, and when the move is in your favor, you need to buy at absolute support, so that way you're not getting minus 50% in your contracts. Uh, and if you're too worried about it, there's another way. This is a little bit more advanced concept, but the way you can play swing plays is that, let's say that your risk per trade is $500, right? So you only put $500 in MGM, for example, and your risk in this case is $500. So what that means is that you're willing to lose that money 100%, as long as, like, but the only thing is that you're waiting for the big move up. So this is a little bit more advanced. Won't recommend you guys to do it, but this is something I've done in the past with success. Is that, let's say that my risk is $500, I will let it go down to 50, 60% down. Let's say I have 2, 3 weeks in hand, and I know that the critical support level is still there. As long as my trade plan and conviction is strong, nothing has changed, I will still be in that trade, because I know that I'm willing to lose that $500, and that way you can do that. Like, just buy the amount of, just put that amount in trade which you're willing to lose, is one another way to not worry about this ups and downs of swing plays. But you need to have 100%. You need to be 100% be willing to lose that. It cannot be like you buy and then next day you're like, oh man, it's already down. I thought that it will go back up. That's not a good plan. There is no plan in that. Okay. So another question is, How to find good entries for swing? I already told this. Higher time frames, 4 hours, 1 hour. Look at absolute support. Look at previous consolidation zones. Look at demand zones. Look at EMAs, leading EMAs on 4 hour time frames and 1 hour or daily, whatever. Look at trendline support. That's the best way. Okay, so next is when to average down on contracts. I already told you if your position size is 100%, don't average down. If your position size is 50%, you can average down. So like you can scale into your position size uh, as the move is in your favor. So I think a better way would be to, let's say that you have in mind to buy like 5 contracts for a play out of money. Just buy one, wait for 10% move up, then buy three more or two more. Wait for 30% move up, and then go full in. And the reason is very simple. Once your contract is above 30%, there is 70% probability that it will go to 90%. Get that in your, like write it down somewhere. Once your contract is up 30%, there is a 90% chance that it will go to 70%. So a better strategy would be for you to scale in, add to your winners, cut the losers. So yeah, that's another thing to keep in mind. So another good question was, what's your method for option stops, OCO based on underlying stock? Yeah, so I don't personally do OCOs. Like I told you, right? It's either like 33% because once it goes to 33%, it needs to go up 50% for me to break even. I mean, it can do it, but at this point, I know that my entry was wrong or my conviction or like it just didn't work out in my favor. I just move on. And but you can keep OCO orders as well. For swings, I recommend it. I do it for think or swim sometimes, where let's say that um the support level is above 30%, right? Like, so I will keep it right. I will keep my OCO order right below the support couple cents, and I'll get out because stop hunting is a big thing with respect to any equities and commons. So you need to keep it a 180R below. 180R means one average to range below the support level for swing plays. What else? Okay, yeah, so this is another good question. How far in the money do you sell before rolling them over to a new strike price? So again, it doesn't matter what I'm doing. What matters is that you need to have a system to do it as long as your risk is managed. So my system is simple. What I do is I, like I wait until it reaches almost at the money. Then I sell all my position, or maybe I will keep one contract or two contracts, or 90% I will sell, keep 10% open. And then I will wait for the pullback to EMAs if it's extended. I will wait for it to retest the EMAs. And if it retests successfully, then I will roll over. Like you don't have to blindly roll over as like you sell one and then you buy next one. I think you can do it if it's a swing play, but for intraday swings, for a longer term swing play, you can do it. For intraday swings, I don't think that's a good idea because your premiums are already inflated. So you need to let the stock pull back a little bit and then enter. And this also safeguards you against, failed breakouts like Netflix had the other day. The lotto call I had, it ran all the way up to 635, 630, whatever level, 630. And then there was a huge kill candle. So if you would have rolled contracts to 640 after selling 631 just because it's in the money, at that point of time, you would have lost big on that. So it's always better to first like wait for the pullback, see if it retests the EMAs, and if it fails, then at least you made profit, right? At least you have money you made. That was a great trade. And if it continues up, you can add back to your positions. Like, you can add back and roll. So that's what I do, but you can have your own system. Like you can do something like uh, as soon as your delta approaches zero point 0.9, you sell, and then you buy something which has zero point 0.6 delta and rinse and repeat. Whatever you do, make sure you can repeat it over time. That's the key. You need to repeat it. Um, which time frame do you use to enter a trade at above, below your level, or close above? Oh yeah, that's another good question. So this person is asking, like, let's say that on a 5 minute, you're looking at 5 minute chart, and let's say that you're trading Tesla, and 800 is the level above which you will buy contracts, right? So oftentimes, like it goes to 802, and then there's a failed breakout, and it comes down. So this person is asking, like, how do you know? So I look at two things. First, if it's a breakout on a strong volume, then I will most probably like enter one position. Like I will enter 10% of my position size. I know risk is high, but at least I'm not gonna miss out on a potential bigger breakout. But if you're a beginner and you have only like, couple day trades available or a cash account, what I will suggest is to wait for it to come back to 800 level and retest it. Or second thing, wait for a 5 minute candle to close above 800. If it doesn't do it, don't enter the trade because it might be a failed breakout. So if you're a beginner, just wait. Patience will pay off, especially for Tesla, Netflix, these stocks. They have a lot of traps. There's a huge seller just waiting above your critical resistance. Another good thing you can do is one ATR above. I know that your risk reward is squeezed in that, like your risk reward is low because the move has already been made, but that's another way you can take. You don't have to take the complete move. You can take a chunk of the move and move on. Um, so yeah, wait for the 5 minute closing. And this applies for your stops as well. Like sometimes, I see there's a stop at 6:30 for Netflix, for example, and it goes to 628, comes back up within 5 minutes range. And some people get stopped out just because they had a stop set right below. So that's why I keep mental stops. I don't really keep OCO orders. But if you're doing OCO orders, then I'll suggest to keep your stops at least like, couple dollars below your uh, critical support zones. Um, what else? Did my account really triple the past month? Yes, it tripled the past month, almost triple. Um, yeah, I think my consistency has improved a lot, and just being able to kind of sharing these setups with you guys helped me research in advance. And I think after like joining or after subscribing to Unusual Whales, I think it has improved a lot because I have like very, very high conviction in the setups I'm trading now. So yeah, let's see how it goes. But so far, I'm really happy with the progress. Can you upload the recording on YouTube later? Because I'm in a restaurant. I'll try. I don't know if I can save it. Okay, so I think those are all the questions on the tweet. So, do you have any other questions? Raise your hands in this app, in the spaces. If you raise your hands, I can see it and I can add you to a speaker, and then you can ask me a question. If there are no other questions, I will end the space. I don't know if you guys have the capability to do it. Can you add emojis and stuff? Like 100 or something. I don't see anyone doing it, so I don't really know if it's possible for you to do it. Let me ask someone. One sec. Oh yeah. Okay, someone just did it. Okay. All right. So there's this raise your hand thing here. If you have any questions, I'll wait for another 1 or 2 minutes. Otherwise, I'll just head out. I don't see anyone asking. I don't see any hands being raised. Okay. So, all right, guys and girls, everyone else, enjoy your weekend. Uh, I will release another video. Okay, so someone requested. Okay, Toto. Let's see how to do this. It's the first time I'm doing so. Hold on. Okay. Hey guys.
Nope, no question. I just want to say thank you.
Oh,
This was amazing.
thank you, man. Yeah, thank you. Appreciate it. Anyone else? Ghost down. I think
Hey,
he's
Drippy,
sleeping.
can you hear me?
Yeah, I can hear you.
Okay, hey, yeah, really great stuff, man. I took some notes, so maybe I can share that out
Great.
later if you'd like.
That would be that would be amazing.
Yeah, so I took some notes. I'm driving right now. I had to jump in the car, but I'll share that out later, so you can share
Okay.
with the group. But
Awesome. Yeah.
you mentioned on swing plays, like using the ATR to kind of help with this not getting stopped out.
Yeah.
Could you maybe elaborate on that for me just a little bit?
Yeah, sure. So, well, the way it works is that let's say you are trading Moderna, right? And mRNA has a very high average to range. I think it's like $10 or $15, right? And your account can go, your contracts can go literally like minus 90% if you keep the stop 180 or below. So I think this strategy works well when the ATR is low. So what that means is that let's say average to range for a stock, let's say you're trading Comcast or AT&T, which literally the true range is like $1 or something less than that. And you're looking for a potential upside 3, 4 weeks out. So in that case, let's say that you bought at support, which was $30, and you're hoping that it will move 5 points in 3 to 4 weeks. So in that case, you can keep your stop at the break of 29 level. And the reason is that, stop hunting is really like it happens a lot on stocks, and you don't want to get chopped up and get out just because like it went one a couple cents below $30 and then you got stopped out while it went to $35 like just a couple minutes after that. Another thing to keep in mind is that the strongest of moves happens after pullbacks, right? Like there are some buyers sitting there down. For a lot of stocks, I've seen this happen is that on a smaller time frame, let's say 15, 30 minutes time frame, there's like right below the EMA, there's a buyer sitting and they buy at the market and the stock rallies after that. It happens a lot with Moderna. So that's another key thing to keep in mind is that, it's not just for swing, you can do the same for scalps as well. So I hope like I answered your question in some way. And to manage these kind of
Yeah, that
trades,
was awesome.
that's the
That's awesome.
okay, great. Yeah. Another point is that if you like to manage these trades, like if you put OCO orders, the problem is that you'll get the worst fills for think or swim. And also on top of that, you might get shaken out just because of the volatility. That's why I personally keep it very simple, which is like 33%, or like the sub break of support level. And I'm regularly monitoring my swing positions. I don't enter more than 5 trades at one point of time. I used to do that before, but I found out that I cannot manage more than 5 trades at a time, like combined swing and scalps. So I try to keep it to five so I can manage them every day without me having to, uh, constantly look at these setups all day, every day, Yeah, so that's all. Anything else? Anyone else? I know we are already stretched 20 minutes more than I thought. But if you have any other questions, I can take it. If not, let's uh, let's just end this now. Okay, someone requested. Hey,
Hey, Drippy.
hey.
Hey, quick question. How long did it take you to get profitable?
Oh, well, like I was profitable, I would say 5 to 6 months after I started trading. Like I think my learning curve was different. Like it's different than other folks, but I think I started getting consistency 6 to 7 months, and part of it has to do with trading crypto a lot uh, on weekends. That way, I just learned price action a lot. Like I remember this. I was in Mexico on a vacation with my girlfriend, and I was like trading on the beach on my iPad. I was looking at charts, so I was just like way too much into it at that time. So just looking at the price action, the number one thing which helped me become consistent was risk management. Get out. If you're not comfortable holding a position, it's always better to get out. Doesn't like it's better to lose 100%. It's better to lose 100% of gain than to think that you will lose 30%.
Yeah, makes sense. And
Yeah.
then how long have you been trading?
Well, I think I answered this question, but I've been trading. Like I've been kind of like being a passive investor. Uh, so I would say like swing trading, more or less, with equities for last 2 years. But options trading, I started in January this year after a big loss. Like a lot of folks, I wanted to recover.
Okay, sounds good. Thank
Yeah,
you.
yeah, welcome. Okay, so there are other requests. So I'm gonna remove some speakers. I can add others. But if you want me to add you again, let me know. Okay, so there's one more person.
Hello, can you hear me?
Yeah, hey.
Hey, thank you for doing this. It was very insightful. I
Yeah, no
had a
problem.
question regarding your opinion as to frequency of trading per day. Do you, as it relates
Uh-huh.
to risk management?
Yeah. Are you asking like
Just
what's
your
the
thoughts.
optimal? Okay.
Yeah, your
Um,
thoughts. If there's a certain number that you won't trade, a certain number of trades, or
right. Right. So I think this is something I have to improve myself in my trading journey. I sometimes feel like I'm over trading. Pretty much, I think every day I wake up, I'm like, well, do I really have to trade? Because I just like, had an awesome week. But then I just gave in. I trade. So I think the reason why I haven't stopped is because I'm on a winning streak and I don't want to lose it. Right? As long as I'm consistently winning, I don't see a reason for me to not trade. And with respect to over trading every day, one of the best things about pattern day trader PDT rule and cash account is that automatically you cannot overtrade. And I cannot emphasize this enough because if you start with $25,000 thinking that, oh yeah, I don't want to deal with PDT rule, well, guess what, buddy? You will lose money. You will lose your account. You'll blow up very fast because you have no idea about risk management. You don't know what position size to put. And like the fastest way to lose money is to overtrade, right? And no risk management. So that's why I suggest to start slow. Take 1 to 2 trades a day. 3 trades maximum is my limit now. Like sometimes I see a really good opportunity. Like I saw Amazon the other day. It was up already, but I was like, well, there's more potential here. But I just didn't take the trade because I just have to stick to 3 trades maximum a day, like intraday trades. Swing plays, of course, they don't count, but for them, I have a rule that maximum I'm in 5 trades overall. Like very rarely I would go like 6 trades. So yeah, that's my opinion on it. Like don't overtrade. You know, if you have made money in a day, let's say that your goal was $100. This is another thing you need to keep in mind. Like what's your goal? Don't have daily goals because I think that's a recipe for disaster because if you don't meet it, you will overtrade. Have some kind of weekly goals that this week I want to have at least 4 green days and I want to have at least $300 in profit. And if you have met that on the first day, wait for the right setup. You don't have to. That was your goal. You met the goal. Trading is a long-term uh, process. Like it will take you like maybe years. Some people it takes 10 years to get profitable. It doesn't matter how much time it takes you. It doesn't matter. Like what matters is that did you follow the plan? Did you stick to your rules? And do you trade well? That's what matters. So that's my opinion on that.
Thank you. Really helpful.
Yeah, no problem. So there's one more person. We have 4 minutes more. So I'm gonna add SD dude. Hey, SD dude.
Hey, can you hear
Hey,
me?
yeah. Hey, what's up?
Hey, Drippy. Just want to say on behalf of everyone, we really appreciate everything you've been doing for us. Me personally,
Thank
I've
you.
doubled my account. I have a small account,
Yo, really?
and I mean, I'm just so stoked. So, anyways,
Congratulations, man. That's
thank you.
amazing.
So, I'm using EMA clouds. So, my
Yeah.
question is, should I have a hard line in the sand, so to speak, as far as
Mm-hmm.
like a stop? Um,
Right.
what
Yeah.
was your thoughts on that?
Yeah, so that's a good question. I think that's something, a couple things for that. First is you need to know the nature of a stock for that. Let's say you are trading Netflix, for example. Netflix has nasty pullbacks. So you can get caught up in that. But let's say you are trading something which doesn't really have a lot of pullbacks. Like for example, Zoom the other day or Upstart or Affirm, they once they go, they can like go up. They don't really have a lot of pullbacks. So you have to keep in mind what stock you're trading. Like if you're familiar with that stock, that's great. Second thing is, let's say that you are using the 512 EMA cloud on 5 minutes, yeah, right? So in that case, on a high volume, if you see that the EMA cloud was broken, get out. Even if it goes above, it's
Right.
fine. Like as long as you have like made profit, just get out. Like why risk your gains? That's what I like. That's what I say. Like for Zoom, for example, it ran up more, but I added it back. Once it broke the like. So what happened? What was that? I think it went to like 62 level or something. I don't remember. It pulled back to the EMA. It kind of broke down the EMA a little bit and then went up again. So, but the volume was kind of like high on that pullback, so I got out. But then I got back in again once it broke that resistance. So that's the way you can trade. Uh, if you have a 25,000 plus account, like you can get in and out without having to worry about the day trades and cash account and stuff. But if you have a cash account or PDT, best to get out. And another thing is like, let's say it's a power trend day, like for example, a firm the other day we traded or a crowd strike play. Um, 512 is kind of like a type EMA. What I look for is 9 and 21 EMA. So on my other uh, platform, which is Weibo, I have 9 and 21 set up as well. So I'm looking at 512 on TradingView and I'm looking at 921. So as long as 921 is holding, uh, like 521, 5 and 12, I get cautious. Like I'm looking, I'm like, I need to pay attention now. Maybe I need to scale out now. I'm looking at the tape now, looking at what the selling pressure is at this point of time. If there's a big seller, it's better to get out because most probably there will be a pullback. Um, and I think but let's say that someone buys uh, above that seller's level, then it will be a great opportunity to scalp and get back in again. So yeah, like it's kind of like it's not a perfect science, trading. Nothing is like 0 or 1. So a lot of things depend on uh, like that day, how the stock is performing. But having a having a system in mind, which I just told, like if it closes on a 5-minute basis below EMA, get out. Whatever EMA you're tracking. If there's a strong pullback on if there's a pullback on a strong volume, get out. Uh, yeah,
Thanks, Drippy. I really appreciate it, and we're all looking forward to the Discord, man.
yeah, me too. I've been working on it. But thank you so much, man, and congratulations again. Like, like if you don't mind me asking, how long did it take you to double your account since you've been following me?
Um, I'd say the last 2 weeks. So basically, my story was I got in with the whole AMC GME craze.
Yeah.
Not knowing anything. I got into
Mhm.
investing. That grew pretty substantially, and then I kind of got tricked into, oh, I got this. I know what I'm doing. And then I lost a little bit, and then basically kind of took a break, and then
Mhm.
somehow I can ended up following you, and ever since I've been doing a lot of research. Like this weekend, I'm reading a bunch of option strats and stuff like that, and I think the thing that changed the biggest for me was when you were talking about cutting your losses early. Because what
Right.
I would do is I'd hang on to contracts and I'd be down like 50% and on quote unquote hopium, hoping it'd bounce back, and then I would just lose my
Right.
contract. So basically, I'm just cutting them out early and
Mhm.
then just getting those small gains, and that's been the game changer for me.
Great. And you have a cash account?
Yeah, so it's a cash account. That was the other thing that messed me up was I'd be out of day trades, so I'd be like in a contract that I thought was going to go up, and then of course overnight it like gap down or something like that, and I would just be stuck. So ever since I switched to cash account, you have a lot more room to make moves, and that's been a
Yep.
big change as well.
Yeah, that's so good to hear, man. Congratulations, really. Like doubling your account in 2 weeks is phenomenal. So keep it up. Keep doing the research. I keep telling, right? Like you need to put in work. He's putting in work even after I'm giving plays, that's what you need to do as well, uh, to be successful. And this is an example right here. Like if you don't believe me, believe someone who just did it. So yeah, congrats, dude. We have one more person who just came in, so you go ahead, rookie. Ask question.
Hey, Ruby. Yeah,
Hey,
thanks for all that you do, man. I
no
keep posting on
problem.
your messages as well. Very informative. I'm a beginning trader, whatnot, 1 month old now into trading, and have been learning
Uh-huh.
a ton of stuff from you. Yeah.
Awesome.
So having said that, Ruby, just one quick question here. I believe I heard you say something on the lines of leading EMAs. I mean, I'm using Ripster Clouds too, trying to understand price action.
Right.
What do you mean by leading EMAs? Like I thought they're all pretty much lagging, right? So what
Right.
exactly do you mean by
Right.
that?
Right. So when I say leading EMAs, I mean like the ones which are leading than the laggards. So it's all relative. For example, 3450 is calculating last 34 to 50 data points for you. Like on 5 minutes time frame, let's say you're using 50 EMA, right? That's calculating 50 data points. So it's lagging, it's averaging out on 50 data frames. But 5 and 12, they're averaging on 5 data frames. So they are leading. They're telling you what's happening right now, like in this short amount of time. So they are giving you a much better information on what's the average price on that time frame. So that's why I call them leading EMAs.
Got it, Ravi. Yeah, that makes sense. Because I'm trying to get my head around the fight wall and 2134 as well. Just trying to understand price action around that. But yeah, thanks, man. Really appreciate all that you're doing.
Yeah, no problem. And thanks for asking questions and joining me today.
Of course, Rippy. And like I said, try for 10x, man. 3x is good, but go for 10x. You're building up a lot of good karma. Good luck.
Thank you, man. Thank you.
Yep. Thanks, Rippy.
Yeah. Okay, folks. Sorry, that's all. Next session, I don't know, maybe it's better to do live stream because it's saved. But I wanted to kind of try out Twitter space as well, just to get more folks to be involved, because I know some folks are not on YouTube and they cannot actively watch it, but you can at least listen to it, right? Like you can drive and listen, so it's like a podcast. But I'm planning to bring in more folks. I have some cool stuff planned for something like a podcast back and forth kind of thing with folks. So yeah, that will be sometime around next to next week or next week, we'll see. But have a good weekend. Make sure you like and subscribe on YouTube. I will post the winners for MGM and all that later tonight, and then weekly setups tomorrow. So check that out. Have a good rest of your day. All of you are amazing. Love all of you. Bye.